Hi, thanks for tuning in. This is the US Futures weekly chart analysis for the week ending 8th of August 2025. The first chart is the US dollar index futures. And after last week, where supply was drawn out as price pushed back into this important longer term trading range, the market inevitably came back this week, testing for supply, spread narrowed, volume reduced and was slightly below the average overall, so selling pressure did ease as prices come back. That's what you'd like to see if the market is going to push back into an important level like this. You'll probably suggest that at this point the market is attempting to absorb its way back through the lows of this range here. It's still questionable whether it'll be successful. It's certainly looking more a chance to be successful than it did earlier on this bar. This attempt was a bit of a weak attempt to push higher. Last week's bar was certainly a stronger attempt to push back into this longer term trading range. We'll just see if it's going to be successful or not. Price pulled back this week and pretty much closed right at the lows of the range, right at the important level. So we'll see how it responds next week. Spread did narrow, volume did reduce, so it's not looking clearly like it will fail and break down. It's looking more like it's going to make a serious attempt to remain at this level. We'll just see how successful that is in response next week. Next chart is the E-mini S&P. This is S&P 500 index futures. Price did respond positively this week. It pushed back higher, bouncing off the highs of the range here. The market's effectively broken out up here, albeit on low volumes. It came back last week. It's testing the breakout for supply. And at this point, the market has found support, sufficient support to bounce off the highs of the range and push back higher again. It's still a little below its previous close up there, but it was a good effort all the same. Volume reduced slightly and was slightly below the average overall, but it was higher than many of the other weeks previously, so especially the up weeks. So it was actually a good attempt to push higher. The market did a pretty good job, really, and we'll just see how it responds again next week. At this point, you would expect the market may attempt to just float higher up here like this, but that's yet to be seen. At this point, all we've seen is a response at the highs of the range, the previous highs of the range, and the market has come in to defend against supply, at least to some degree. Next chart is the US Treasury 10-year note futures. They continue to trade sideways within the range of that big wide down bar here. Price did push higher last week, and this week the market's moved into consolidation mode to a large degree. It's right up high in the range, which is generally quite strong. Remembering in this market, if price goes higher, interest rates are going lower and vice versa. So the market is pushing higher through here. It's pushed higher last week. The consolidation's right up high in the range, at least at this point in time. The market's making a pretty good attempt to consolidate, and it's going to probably push higher in response if that period of consolidation is successful. Sometimes you do see the consolidation with a little test for supply like this in response earlier in the week before the market does end up pushing higher overall, and you get a bar that looks something like that for the week. So we'll just see how we go. That's certainly some chance. Next chart is copper price futures. The copper price futures had a really seriously exaggerated down bar last week. This is what happens when some of the professional traders in the market get caught on the wrong side of the trade and then have to fix their book, and they dump hard, and that's what happened on this bar. a really widespread down bar. Increased volume, but not excessively so. This is everyone on the same side of the trade, selling down positions. This week, the market has consolidated and it's closed right at the lows of the range here. Price remained inside the range of the previous bar all week in here, and spread narrowed considerably. So the market is stabilising to a large degree back at the lows of the range down here, and I'll expect the market to continue trading down there for a week or two, sort of in this sort of zone here, down low, adjacent to anything across here. So you may see the market move a little higher next week if trading conditions are relatively favourable. I don't expect any sort of big reversal like this at all. There's no big reversal likely. Anything's possible. It's not likely. More likely is a period of consolidation sideways for a few weeks down there at the lows of the range. Next chart is gold price futures, and gold price futures did close higher this week and moved above this important level here. It's not the highest close we've seen, but it's right up there, and it's certainly a good response to the test for supply or mini shakeout we saw last week. So you've got two up bars in a row now, and the price has moved above the important level where there was highs established here before that supply was drawn out. This market does look like it would like to go higher. It may do so with a stair-stepping motion, more like this. We'll just have to see how the overall market plays out, but it certainly looks stronger than weaker. Silver price futures. The silver price futures were a little stronger than the gold price this week. Spread was wider, volume was increased and up to average. So this was genuine trading. The market remains a little below the previous highs over here, and prices bounced off this level here where the market broke out a month ago. So support was found at that level. There was a defence against supply, and price has responded positively this week and pushed up. This market also looks like it would like to go higher. It may do so with fits and starts, similar to gold, but it does look like it would like to go higher. This is like crude price futures. Price pulled back this week in response to the supply that was drawn out last week. There. And it's closed pretty much adjacent to that bar's low. You've got this level low as well. You can see how the market's traded between those two levels. You could really say the market is trading roughly sideways in here, like that. The market moved too high here and drew out supply, and this is the just right level, if you like. And this is where price is going to remain. You could get a dip down to this sort of level at some point, but I think price is likely to trade within that range, at least for some time, or if there's a catalyst emerge to push price higher. Into the currencies now. This is the euro US dollar currency pair, and it did see price push higher this week, albeit with a reduced spread and relatively low volume, so it wasn't a well-supported push higher. It does, however, suggest that last week's bar may have overshot its levels, and it probably should have closed at this level here, and it closed just a little below that level. Prices recovered a little this week. It may be that the market is actually trending a little lower here, or is going to grind a little lower. We'll just have to wait and see on that. Mainly because volume was reduced There was a lower up volume than the previous bars, up volume here. So there certainly wasn't a great deal of support for the upside. The market's really just floated higher on a lack of selling pressure and that little bit of weakness in the US dollar that we saw earlier. It wasn't a strong move, put it that way. This is British pound currency futures. And price also pushed higher this week, albeit on lower and well below the average volume. So once again, price has just floated higher and it hasn't really moved higher with any real intent. So what that really means is in markets where price just floats higher on low volumes like this, if supply is drawn out or the market does reverse, there's nothing substantial holding the market up and it comes down easy. It comes down really easy because there's no underlying support. It's just floated higher on a lack of selling pressure effectively. And if supply is drawn out, it just crushes the small amount of demand and price comes back easy. So this market's also pushed higher this week, but it's not a strong push. Next chart is Japanese yen currency futures. Spread reduced considerably this week. You can see the market attempted to push higher in response to last week's shakeout bar. That's the response you'd like to see, either a test for supply or a push higher in response to a shakeout like that. The fact that it's closed poorly doesn't necessarily mean it was drawing out supply. You can see the volume was low and lower than the previous up bar's volume. So selling pressure doesn't appear to be a great deal of an issue. At this point, I generally call these sort of bars absorption bars until proven otherwise. If you get a big, strong down bar in response, well, then you go back and say that was a supply bar. If you get a push higher in response, then this bar was an absorption bar. So it's a bit of a suck and see sort of a bar at this point. With a shakeout prior to it in the background, I would lean towards the fact that it's an absorption bar, and I would go with 60-40% chance at this point in time. I do like to assign odds to things. So 60% chance that's an absorption bar at this point, and we'll just see what we get next week, and that'll change the probability to some extent. Next chart is the Aussie dollar futures, and price also responded positively this week. Pretty much has to with the US dollar coming back this week. All these markets pushed higher in response, and this market was no different. It pushed higher in response. Similarly, though, with a reduced spread, so similar to the euro and the pound, with a reduced spread and reduced volume and lower than the previous up bars volume. So this wasn't a strong push higher either. The market is sort of back in this rough channel that I've marked. So that is some sort of positive. It is only a rough channel. It's not marked exactly. I would suggest this was also a fairly weak push higher with no great substance behind it. And we'll just see how the market responds next week. Because if the US dollar does push higher and back deeper into the longer term trading range that it's attempting to recover back into, these markets will probably all fail and push lower and below the previous down bar's low, or at least threaten to. The next chart is Bitcoin futures, and Bitcoin futures responded slightly higher this week. It wasn't a strong push higher by any means. Spread was narrower than the previous bars. Volume reduced considerably. Prices just floated higher this week, mostly on a lack of selling pressure, but there's no great intent behind this week's push higher. I do note that the market didn't actually reach this level below. That's generally a sign of strength, but only a minor sign of strength at that point. What you're actually seeing here is after a push higher, you're seeing a period of consolidation in response. And it's looking somewhat like a bull flag, which you would expect if trading conditions remain favourable to see a push higher in response. But at this stage, the market's just floated higher on a lack of selling pressure. You can see that with the very low volume this week. That's possibly the lowest volume for weeks and weeks. So it certainly wasn't a strong push higher. There was no great intent being shown. And if supply is drawn out, this market will move lower because there's no great defence being offered to the market. So just be a little wary until we see a little bit more vigour towards the upside at this point, because if any supply is drawn out for whatever reason, the market won't hold up easily. It'll pull back and test probably this important level here for strength again. So just be a little careful, a little wary at this point, because if any supply is drawn out, the market is likely to pull back somewhat. Just back to the US dollar index futures quickly before we wrap up. You can see the relatively strong push higher last week. It did close well off its highs. So some supply was drawn out for sure. The markets came back in response. It's closed below the recent lows where previous support was found down here. This is the lows of the longer term trading range, and it's closed right at that level this week. Volume was increased over the previous down bars volume. So there was some supply being drawn out, and the reduced spread suggests the market is attempting to absorb that supply. It's defending against supply. And that offers you an increased chance that the market will recover back into this longer term trading range, or at least make another attempt to do so, possibly next week in response. And if that's the case, you're going to see some of those associated markets, especially the currencies, really coming back, and probably hard, depending on the spread of the up bar in response, if we get that in this market next week. And you'll also see subdued moves in gold and silver and possibly copper as well. And also watch those markets carefully. If this market, the US dollar, does move higher and they also move higher, that's a really strong move by those other associated markets. So keep an eye out for that. Okay, thanks for your time. We'll see you again next week. See ya.